Hey, what's up, my friend? So in today's episode, it's all about the 1 hour time frame, baby. So I want to share with you a few truths about the 1 hour time frame that you might not be aware of. So let's talk about the 1 hour time frame. This is definitely one of the most popular time frames among traders because especially for forex, right? If you install MT4, TradingView or whatsoever, the 1 hour time frame is like one of the default time frame that comes with the software package. So, and also, right, the 1 hour time frame, it's fast enough, right, to give you enough action, right, and at the same time not too fast to the point where you're scalping the markets in and out, making reckless decisions. So the 1 hour time frame kind of like give you a little bit of breathing room, right, to plan and execute your trades. But still, right, there are a few things that you must be aware of, right, when you are trading the 1 hour time frame. So let's get started. First thing first, number one, if you are trading on the 1 hour time frame, you must expect, right, that your holding time period or the trade duration, right, might last up to 1 day, 2 days, or even 3 days. Why is that? So here's the thing. Yes, you're entering your trades on a 1 hour time frame, but as you know, right, let's say for example you buy at support and look to sell at resistance. You don't just buy at support on the 1 hour time frame and the next hour, boom, the price hits resistance. Yes, you could have that scenario, but more often than not, right, you buy support, the market needs time, right, for it to reach your target, right? Maybe 3 or 4 candles later, that will translate into 3 or 4 hours later. But what if there are times you buy into support and market consolidate, range, go against you, play with your feelings, play with your emotions, and then finally reach your target, and by the time that happens, that's like after 30 or 40 candles. So you can see that your holding time, right, if you enter on a 1 hour time frame, be prepared to hold your trades for even a day or two, alright? That is highly possible. Number two, if you're trading on a 1 hour time frame, right, then what is a time frame that's relevant to you, let's say for doing multiple time frame analysis? Let's say if you want to reference the higher time frame, what is a time frame that's relevant to you on the 1 hour time frame? So if you have studied the earlier episodes that we discussed, the multiple time frame cheat sheet, we use something called a factor of 4 to 6, a technique I learned from Adam Grimes and Alexander Elder. So how this works is that if you are entering your trades on the 1 hour time frame, then you apply a factor of either 4 to 6, right? Your higher time frame will be anywhere between the 4 hour time frame to the 6 hour time frame. So it could be the 4 hour time frame, the 5 hour time frame, or the 6 hour time frame. So anywhere you kind of decide, it's up to you, right? But that is just kind of a range of a time frame that you can consider to use for your higher time frame analysis. So clearly in this case, right, if you're entering your trades on a 1 hour time frame, the weekly time frame, the monthly time frame, the quarterly time frame, I would say those are kind of irrelevant, right, to your trading. Okay, so that's the second thing. The third thing, if you enter trades on a 1 hour time frame, then yes, the news matters, right? I'm not saying the news matters in the sense that you need to trade the news, but rather, if you're entering and managing your trades on a 1 hour time frame, then when a news release occurs, right, the spike, right, could be large enough, right, to stop you out of a trade. So if you are a 1 hour time frame trader, you must be aware of news release, because any sudden news release, right, and chances are your trade could get stopped out. So a few things you can do. Number one, if you know there's an important news release coming up that is pertaining to the markets you're trading, then you can just bail out of the trade and not get involved in the news. Second thing you can do is maybe manage your risk, reduce your position size. So if let's say you have one lot on euro dollar, you might look to sell half a lot and just have half a lot remaining. So those are a couple of things you can consider, right, when there's a high impact news coming up. Okay. Fourth thing, if you trade on a 1 hour time frame, right, not all markets are suitable. So first thing first, forex markets, I would say most major and cross-currency pairs, it's suitable to trade the 1 hour time frame because they are liquid. You can pretty much enter your trades, exit them relatively easy. But if you trade exotic pairs like, let's say, dollar against the South African rand, dollar against the Indian rupee, the spread can be pretty large. And if you were to trade the 1 hour time frame, right, your trade, right, a huge percentage of the profit, right, will go to paying the spread. So I won't really recommend that. So be aware of exotic currency pairs, right, when you're trading the 1 hour time frame, especially when the spread is pretty wide. Another thing is that if you trade stocks, right, I would say liquid stocks, right, large cap stocks, 1 hour time frame, no problem. But if you were to trade again, like like penny stocks or illiquid stocks, the 1 hour time frame, again, right, you might not make sense out of it because there's not enough liquidity, right, to have charts, right, that looks tradable. Okay, so I would say generally highly liquid stocks, most FX pairs, 1 hour time frame can be applied, but at the same time there are markets out there that the 1 hour time frame won't make sense. So be aware of it. And finally, the 1 hour time frame, who is it for? I mean, is it suitable for you to trade? So let me share with you who it's for and who it's not for. So first and foremost, right, if you are having a full-time job, the 1 hour time frame, clearly it's not suitable for you, because every candle, right, you get a new candle being painted. And if you're at your job, right, I don't think you can check the charts every single hour. Okay, so for those with a full-time job, I would say this time frame is pretty much too fast for you. But at the same time, right, if you are someone who, let's say you're a day trader and you want more trading opportunities that doesn't require as much screen time as day trading, then you can consider the 1 hour time frame, maybe a longer term swing trading approach relative to your day trading endeavor. Or maybe if you're a student, right, you're studying full time and you have pockets of free time available, 1 hour time frame might be suitable for you as well. So, and maybe you have a part-time job, right? And again, you have, again, pockets of free time, 1 hour time frame might be suitable for you as well. Okay, so these are the few things, right, to consider when you're about to embark, right, on trading the 1 hour time frame. So as a quick recap, right, let's do this, right? Number one, if you trade on a 1 hour time frame, be prepared, right, for your holding time period to be anywhere between a few hours to even a few days. Number two, if you trade the 1 hour time frame, your higher time frame can be anywhere between the 4 and 6 hour time frame. Number three, the news matters, right, because when a sudden news release comes out, right, and on your 1 hour charts, it could just look out of whack, right? Huge spike up and down. So be aware of news. Number four, most markets are suitable for the 1 hour time frame, especially liquid stock markets, FX markets, but be aware of certain exotic currency pairs and less liquid stocks. And finally, number five, the 1 hour time frame is suitable for those of you who are maybe studying, working part-time, or maybe you're a day trader and want more trading opportunities. 1 hour time frame is suitable for you. But if you have a full-time job, then 1 hour time frame is probably not for you. Okay, so with that said, I wish you good luck and good trading. I will talk to you soon.